Now that the Canadian federal election is over and the dust has settled, with the Liberal minority being confirmed, it's time to step back and think about what it really means for the Canadian stock market, Canadian bond market, and currency. I'm Petursson, Chief Investment Strategist at IG Wealth Management. Join me each week as we discuss the trends dominating the investment landscape. It's the week of April 28th, so listen on as we navigate the living market. For the most sensitive aspect of the economy right now, that is trade policy, and in particular tariff policy coming out of the United States directed at Canada, the situation remains fluid. But there's a case to be made for more stability ahead. Mark Carney, the new Prime Minister's international reputation and experience should help smooth relations with the United States, or at least prevent unnecessary friction, which adds another layer of certainty for businesses and investors, or at least removes some of the uncertainty. Simply put, it's one less thing to worry about. Energy and resources policy is the area to watch when it comes to politics and markets. In theory, any shift should be positive. It's already extremely difficult to add new restrictions, and a more pragmatic tone from the Liberals could be a tailwind for Canadian producers. If energy policy turns out to be even mildly supportive, the sector might regain some momentum, especially if global demand stays healthy. Looking at the market more broadly, though, as we have said in the past, Canadian stocks are more sensitive to global trade flows and commodity prices than to domestic politics. While Canadian elections are interesting to watch, they rarely move our markets dramatically in one way or another, and this election has been no exception. As for the currency, first and foremost, it's still all about the rate differential with the United States. That is the difference in interest rates between Canada and the U.S. The narrower or tighter the spread between Canada and U.S. interest rates, the stronger the loonie tends to get. With a Liberal minority, there's now a possibility of supportive fiscal policies, including potential tax cuts, which could bolster the Canadian economy, giving an extra boost to the Canadian dollar. Now, that's not necessarily great news for exporters, but not necessarily bad either. In summary, here are the three things that we are watching. First one, energy and resources policy. An expanded resources policy should provide a tailwind for the sector and support broader market performance. Second one is tax policy. Proposed tax cuts are likely to stimulate the economy. A stronger economic backdrop could, in turn, slow the pace of Bank of Canada rate cuts, limiting the downside pressure on the Canadian dollar. If the fiscal measures prove genuinely supportive over the longer term, we could see our loonie trend higher over the course of the next, say, 2 to potentially 5 years. The third one is tariff policy. With deep experience in crisis management and strong global connections, Carney's leadership is well positioned to deliver constructive outcomes on trade. A positive resolution on tariffs would be a clear boost for both the Canadian economy as well as the loonie. Overall, we don't see the election results moving markets in any meaningful way over the near term. With the election behind us, one element of uncertainty has been removed, and that's a good thing. The bigger picture is towards the future and what policies the new government introduces and what it may mean for the Canadian economy and markets. I'm Petursson. You've been listening to Living Markets Podcast. If you've enjoyed this podcast, please take a moment to rate it or share it with colleagues and friends. It will help other like-minded individuals find us. Thanks for listening.
The content of this podcast, including facts, views, opinions, and recommendations, is not to be used or construed as investment advice and is not an offer or an invitation to buy or sell any security. The content of this podcast should not be relied upon for any purpose, and IG Wealth Management is not responsible for any reliance upon it. This podcast includes forward-looking information that reflects our current expectations or forecasts of future events. Forward-looking information is subject to risks, uncertainties, and assumptions that could cause actual results to differ materially from expressed herein. Our views are subject to change based on market conditions. Commissions, fees, and expenses may be associated with mutual fund investments. Read the prospectus before investing. Mutual funds are not guaranteed, values change frequently, and past performance may not be repeated.